Welcome to our webinar on protecting your house hack stack. Now, we do a lot of content and webinars on how to achieve financial freedom, how to go out there and create assets, how to go out there and get rental properties. Now, a very, very important, confusing, and a little bit boring aspect of it is how do you protect it? How do you make sure that you can grow it? And through all like the punches of life, how can you make sure you protect it and your family and your assets? So this webinar is dedicated to what do you do with your house hacks? Because a very common question we get is, should I put my house hack into an LLC? And this is like a tip of the iceberg type question where it's not just a simple yes or no. We're going to go down and talk for an hour in a webinar about how this just spirals into so many other questions and so many other things that you have to consider here. So as you go through this webinar, I want to be very clear and give you a disclaimer. This is not legal, accounting, tax, or financial advice. Please consult your professional team before you go out there and make any decisions. All right. Now, to answer this question, I brought in an expert panel so we could go through all the details here. So my name is Chris Lopez. I'm the founder of Envision Advisors. I'm an investor here in Denver and do house hack with my mother-in-law. I do a multi-generational house hack. My next co-host is Ben Einspar, who's our house hacking specialist at Envision Advisors and also an active house hacker himself. Hey, Ben, how's it going?
Doing great, Chris. Thanks for having me on.
Really glad to have you in the studio. And Pam Maass with Law Mother, who's our estate planner. We'll talk all about protecting your assets. Welcome back, Pam.
Thanks for having me, Chris.
It's always good to have you in here. And then last but not least is Byron Elliot with Three Pillars Law, who's going to give us all the basics on protecting our assets through LLCs. Byron, glad to have you back in the studio, man.
It's good to see you again. Thanks a lot for the invite.
All right. So the way we wanted to, talk about this, because legal, financial stuff, again, they can get dry and boring, and we don't want to just sit here and kind of like read off to you like a Google, doc would, but we actually want to give you like, hey, how's this work in real life? So I think, Ben, this was probably 2 months ago we got this email from a client.
Yep.
All right. So this is a client who's on, I think, his third house hack.
Third house hack, correct.
Third house hack.
One of our OG clients.
Yeah. So he's been just house hacking every about 2 years. He's house hacking. Very, very common house hacking profile. And he says, hey, I want to reach out to you guys for bookkeeping, legal advice, and tax filing. When I started in 2018, I used a Google Sheet for bookkeeping, and I'm still using it. Not bad, but not great. I've used his CPA last year, and it seemed like what he did, I could do it myself on Credit Karma, minus a couple things. My CPA is not responsive this year. What should I do? Can you recommend anyone? And then I'm also trying to figure out how can I afford a lawyer for my legal advice regarding my house hack. So long story short, what's your advice on where to find an affordable CPA, bookkeeper, and legal advice? Those can be very important scale-up plans for my business. I'm not sure the best way to get it done. So this client just kind of sums up where our clients are. And so this webinar is for you and everyone else out there. And so we're going to go through and kind of answer this client's questions because it mirrors so many other people's on here. Because again, it's a smorgasbord of what do I do here? All right. So today's agenda, we have broken down into asset protection, the finance and tax basics, and then estate planning. Again, they all kind of work together and cross over. And that's why we got our panel of experts on here. So Ben,
yes.
How many times do you get this question?
Oh man,
do I need an LLC for my house hack?
None today, but
well, it's only the day's not over yet.
Quite a bit, Chris. I talk to house hackers every day, constantly, and this is a question that I get all the time: is, hey, okay, so before I buy it, should I put it into LLC? How do I do that? And everything along the lines of LLC, because you Google anywhere where there's bigger pockets of form, it's hey, you own any type of rental, you need an LLC.
Yeah. So Byron, when we're looking at here an LLC, this is a very loaded question. And we're looking at house hackers. There's really like three main phases that makes them very unique from your typical investor. One is that they are buying the property and going to live in it. Do they need an LLC then? Then while they're living there, if they're house hacking with roommates or Airbnb, and then once they move out and turn to rentals. We have three distinct phases here for house hackers. And so when someone's buying, do they generally need an LLC for house hacking?
Yeah, I think we had a nice discussion about this just prior to the show. And upon further reflection, I tend to lean your way in that no, you don't want to take title to the property when you're going to house hack. I think a really significant thing to think about here is from a flexibility standpoint. If you take title to the property in your name and you're going to live on site, conceivably that's your primary residence, right? So there's a very important tax benefit if you take title to an LLC instead of your primary residence. That's the personal residence exemption. So I think we've talked about this on previous shows, but just to recap, if you live in a primary residence 2 of the last 5 years and you sell that property, it's considered a non-taxable event. So imagine if you take title in an LLC, in some ways you don't get to have the benefit of that. And I know a lot of people like to do a buy and hold, but from a flexibility perspective, you may want to be mindful of that if you're considering selling the asset after living there for 2 years.
And I want to pause it because that's a great point. And not this client, but another client of ours, he bought a house in like Congress Park, 2017, 2018, lived in it for a couple of years, moved out 18 months ago, and now he's selling it, and he's going to take like $300,000 in equity, tax free. And then not do 1031, but tax free, and go out there and use those proceeds to go buy a fourplex or some other better rental property. So case in point right there, there's $300,000 tax free.
Yep.
Holy smokes.
What a way to capitalize a real estate portfolio.
Yeah.
Right.
The other thing about, like, you brought up the tax reasons, I look at from like the financing standpoint. If I go out there and talk to one of our lenders to give us like that owner occupant financing at 5% down or 0% down VA loan, can't go out there and buy it in Chris Lopez LLC. It's Chris Lopez has to buy it. So from our perspective as brokers, it kind of takes out the benefit of house hacking. You won't get the great financing on there. All right. So from a high level, no for when you buy it. What about while living there? So classic example, we're gonna talk about Ben here.
Let's hear it.
So Ben's house hacking.
Yep.
Got an awesome new build townhome up in Wheat Ridge. Top 2 floors from his family live in, and then bottom has an Airbnb suite, different space. So he's living there. Do they put an LLC in while they're living there, Byron?
Yeah, that's a great question. I don't think there's a dispositive yes or no. I think if you feel comfortable enough that you're on site, you're going to be managing the property, that you may not need to consider putting that into an entity. The other piece that you described is if you do take title as an individual or joint tenancy with right of survivorship or tenants in common as an individual, then you maybe you're less concerned about LLC and asset protection because you are on site. I would say one thing to just consider when you're conducting business outside a limited liability entity, and you're conducting business as an individual, you would be considered a sole proprietor, right? If you have 2 people that are participating together in a business endeavor, whether they're filed with the Secretary of State or not, that's considered a general partnership. And so there are some liability questions there that you want to answer, and then you have to make a determination of what is your risk tolerance based on your business behavior. This is a great example of something that's very fact specific. And so this is something where, depending on your facts and your circumstances, I would talk to a professional.
Yep. Yeah. And to pull back the curtain to answer that is my primary residence is not in an LLC.
All right.
For that specific reason.
All right. The third scenario, after moving out. So, we got Ben, he moves out of his townhome, converts it to a long-term rental. At that point, what about an LLC, Byron?
Yeah, I think that makes sense, right? That makes perfect sense, because now you're certainly conducting business, right? And this is a business asset. One thing that you need to take a look at is the mortgage documents when you purchase the asset. It's very typical to have a due on sale clause, right? And so if there's any transfer of title, whether it be from you as an individual, even to an LLC that you own 100%, in some cases, there is language in the loan document that would suggest that that's a due on sale, and they could effectively accelerate your loan. And these due on sale clauses, they're not front and center on page 1 of your loan agreements. Usually page 18. Page 26 or something along those lines, right? So just before you do something like that, before you transfer title and file a deed, just make sure again you talk to an advisor. Review your loan documents.
Yeah, and just to add to that, because I was in a fiery debate at a panel a few weeks ago about this, and practically speaking, most of the time, if you're paying the mortgage, they're not going to trigger that due on sale until you die. And that's kind of the world I'm in. And then a lot of assets get lost. And so it's one of those things that a lot of people advise you, hey, don't worry about it. And then people pass away and it goes away and it becomes a big issue. So it's definitely something you want to consult with a professional. And you can consider having a trust in the background for those reasons to get some additional protection.
Yep. And we're going to layer in the trust aspect kind of towards the end of this webinar, is getting into asset protection or more into estate planning with some asset protection on there as well. So great points there. Absolutely look at the due on sale clause. That's pretty much every loan doc I've ever seen. I've transferred LLCs out of there. Just in disclosure, it's a pretty common practice for real estate investors because you're trading one type of risk of, hey, I might have some mortgage risk of being due on sale clause, but you're protecting some liability risk. So it always comes down to risk reward, and you're always having some risk exposure. I would rather have less liability exposure, a little bit more loan exposure for me personally. So again, great stuff here. And as always, make sure you talk with a professional to figure out the basics on there. And as we go through, I know we're going through a lot of topics. Two things: ask questions in here, guys. We got the chat box. We'll be monitoring those and answering those throughout the webinar. And also almost about a year ago, we recorded some really cool podcasts, a 3-part series on asset protection. It goes into a lot deeper dive and more of the LLC stuff, just in the general aspect, not so much like the house hacking aspect of it. So I'll link to those. So make sure you look at those 3 ways to protect your assets throughout the life cycle of an investor. But give us the basics of an LLC, Byron. So people move out, Ben moves out, converts it to a rental property, moves an LLC. Just what's the high level of it?
Yeah, so LLC is simply a limited liability entity, right? It's a fairly new limited liability entity, but very popular, especially for taking title to real estate assets. So here we presume, again, this is a scenario where you've moved out. Now you want to turn this into an ongoing business endeavor. So the question is, should each investment property be in its own LLC? There's some benefits to this. I mean, the reason that you're forming the entity and taking title in the first place is to add a layer of asset protection. So presumably Ben's unit transferred to an LLC. Ben continues to build out his real estate portfolio over time with additional assets and additional LLCs. Ideally, if something happens on Ben's property, like a slip and fall, banana peel, and whatever happens to that potential claimant, right? Whatever they receive from the court would exceed whatever your insurance policy would cover otherwise. Ideally, the liability is only extended to what is owned by that particular asset. You have some responsibilities as the person who manages the LLC to make sure you conform, corporate compliance and whatnot. And I think we talk about that here in a minute. The other kind of neat thing about having an asset in an individual LLC is, and I'm seeing this a lot right now in the work that I do, is rather than have a transaction where a buyer buys a property from a seller and exchanges title, they'll actually buy the LLC and all of the assets owned by the title. So there's a little bit of flexibility from a tax standpoint too. Again, something I would certainly talk to both the CPA and your real estate attorney about, but that's very common right now as people are raising capital or they're acquiring an LLC as an ongoing business endeavor, and it just so happens that the property conveys with that transaction.
So question. So I created an operating agreement because I moved out of my house hack and now it's a stabilized rental. But my, let's say, long-term vision, like you mentioned, is an LLC in each stabilized rental, which was formerly a house hack. Would you recommend creating a holding company for that to own those LLCs right off the bat, or would you wait until you're getting ready to create your next LLC? If that makes sense.
Yeah, I think it's always important to take a look at what your long-term goal is, and there is some point there's some trigger, right? If you're going to do this full time. A lot of times I'll advise my clients is they're going to kind of escalate and grow. And especially if they're going to start raising private equity and syndicate deals and take a carried interest, that at some point it may make sense to have a holding company whose activity is completely passive in nature, right? And so the way that would work is you have one company that has an ongoing business operations, let's say like what we have right here, whether it's Envision or whatever it may be. And that's an operating business. And then you're going to raise private equity through that business. You're going to purchase an asset, and then you take a carried interest. You would put those LLC interests in your holding company, as well as the 100% membership of each of those what we call a property level LLC. That's a very common setup. Again, it just depends on what your goals are. Understanding that each time you set one of these LLCs up, you've got to maintain it, right? You've got to have You've got to file with the Secretary of State. You've got to get your EIN, your bank account, write your operating agreement, actually adhere to your operating agreement. And then there's ongoing costs and incurred with that. We talk about that here in a little bit, I think.
All right, so you can see here, if you guys didn't follow every detail that Ben and Byron were talking about, don't worry about it. This is some of the nuances of LLC, but as your real estate portfolio grows and your experience grows, you're going to move more and more to the LLC world. And so getting an LLC set up is like a lot of times step one, but it opens the gates to, more future investments and styles. So here's another question we get is, how much can I expect to pay for an LLC? Like, what does it cost? And you Google it, you talk to people, the price is all over the board. Byron, how many LLCs do you think you set up in your career?
Jeez. Oh, just this, I think this year alone, probably 75, maybe 100. But yeah, I mean, a couple thousand.
All right. So you've been around the block a few times.
Yeah.
Give us the basics on just like cost and like, there's hiring professionals or DIY.
Yeah. So there's a couple kind of line item costs that you can consider as you're trying to decide whether to try to do this on your own or whether you hire somebody like me or another attorney. There's a formation cost. So that's a cost that you incur with the various secretaries of state. So whatever jurisdiction you're going to file your entity in. I think Colorado right now, I think it's $50, but it fluctuates depending on what the Secretary of State is doing at the time and whether they want to encourage entrepreneurship. And on the higher end of it, like I think California is the most expensive state right now. I think it's $850 to file initially, and then there's ongoing fees as well.
I can confirm that because I still get those damn bills from the FTB.
So yeah, take a hard look. There are some states that are very inexpensive, but also very owner friendly. You hear most of people talking about like a Delaware, Wyoming, a Nevada, whatever it may be. But again, you got to take a look at what your long-term plan is. And what I mean by that, it's very often, especially if you're going to incur commercial debt, the lender may ask for what's called an opinion letter. So it's an opinion letter based on each entity in each jurisdiction in which you're doing business. So you can see that can get very expensive over time. So you just, again, talk to a professional about what your high-level goals are and get set up right on the front end. Second piece there, drafting an operating agreement. So, everybody sees, LegalZoom or online drafting platforms, or there are companies out there that will do a very basic operating agreement, whether you have a subscription service with them or whether you just do a one-off an operating agreement. You can get those done for being $100, $200 a piece. And then on the professional side, single member LLC ranges anywhere from $750 to $1,500. And so again, there may be some cost savings associated with doing it through some online automated platform, but I've found in real estate in particular, there are so many nuanced little tax advantages, and it's worth its weight in gold to talk to a professional on the real estate benefits, which should be incorporated into your operating agreement. And then a registered agent. So if you're forming an entity in a jurisdiction where you don't reside, typically you have to hire what's called a registered agent. This person's sole purpose in life is to open your mail, is to be available if somebody wants to serve legal notice to you. But that's an additional cost depending on where you're filing. Anywhere between $75 and $150 a year.
And just to add there, a lot of times my clients are, forum shopping and looking at Wyoming or Delaware, but they don't realize that if you own real estate here in Colorado, you're still going to have to register in Colorado. And then the whole reason for them forum shopping is kind of devoid at the end of it. And so it's really important to work with a professional, because if you do want privacy in Colorado, you have to structure it in a specific way ahead of time to make that happen.
I totally agree. And most of our listeners are Colorado based. So talk with the Colorado team. We've talked about this, Pam, is, people go to some online seminar or whatever, and they get sold, a $30,000 fancy schmancy. Do this all in Wyoming or Delaware, but it doesn't, like I said, it doesn't work in Colorado because way Colorado is set up. So my recommendation is to work with a local team because they know the rules, they know the regulations. Something else I'll say here, I've done LLCs myself, and I've hired lawyers and legal firms to do my LLCs. I'm a huge proponent that, hey, the extra couple bucks it takes a professional to pay it and do it is well worth it. For me, it's a huge peace of mind, and also I'm not the best at paperwork. So I've probably half-assed a lot of the DIY ones I did, which kind of defeat the purpose if I actually got in trouble. The veil will probably pierce pretty easily. So I'm a huge proponent of working with a professional. or at the very least, start building your team of lawyers, of CPAs, estate planners, because like it's not a one and done question. You grow, things change. So it's very, very valuable, in my opinion, to have like your legal team along with you from like day one. So let's talk about this, because this is often like part of having an LLC and layers on there is like, what type of insurance do I need? I think for many people, insurance is the first line of defense. So when we look at insurance, what advice do we have for that? And how do you put that in context with a LLC?
Yeah, so I would say, I started my career out on the insurance defense side. So I kind of defended developers and contractors, and then I went on the plaintiff side. And across the board, the number one issue I saw is people did not have good insurance. So if you're going to spend your money anywhere first, I would say invest in the best insurance you can and work with a professional who understands real estate investing and understands your concerns. Pull out a copy of your insurance policy and look at the exclusions page. I was just talking with a client who came to me after they were already in litigation, and they discovered there was an exclusion for carbon monoxide issues, and they're being sued for that. And they didn't realize they had an exclusion for that. So people will go and get a big umbrella policy and be like, oh yeah, I have 1 to 2 million in coverage. But then they have an exclusion for a lot of the common issues that we come up with in Colorado. And so if you're doing it yourself online, you're going to get the cheapest product, and you're not going to get it's kind of a false sense of security. So I would say work with a professional, look at that exclusions page, and make sure you get coverage for the things here in Colorado that investors are most likely to be susceptible to. So the biggest ones that I see when I was in litigation are slips and falls, like we were talking about with Byron. Not on banana peels, but on snow and ice. That's kind of the big one. And then dangerous dogs are a big one that catch people off guard. So if you rent to tenants that have a dangerous dog, and that dog goes and hurts someone, you're going to be on the hook. Carbon monoxide issues, and then just general dangers you know or should know of. And so if you have, obviously kind of the thing we always heard in law school was that like big pit in the front of your yard that people can fall in, right? But it's not just those kind of obvious stuff. Like if people are complaining about, your stairwell or other issues on your property that are dangerous and you get sued, you're going to see some issues with getting coverage. And then to just kind of loop it into what Byron was saying is if you do end up deciding to put it in an LLC, the big mistake I see is people don't add that LLC as an additional insured in their insurance policy.
Mm-hmm.
And then they get sued, and then you're looking at a really, really big potential for having to pay out of pocket. So make sure you're adding additional insured for those types of things.
Yeah, that is so well said. And as you're talking about the story, one of my early memories here is I was out looking at properties, took a client, we walked the fourplex, we were in a contract, we were going to do an inspection on there. And while we're doing the inspection, when the tenants came out, I was like, hey, she didn't know who we were. We thought with the manager. She's like, hey, I've been emailing you guys forever. Like, can you get that hammer sitting off the roof up there? And just like over door number 2 of this fourplex is just this 20-ounce framing hammer just hanging up there on the roof. And it's like, holy crap, that's just chilling out there. And and that was a professionally property managed company property. I was like, wow, that is scary on so many levels. So yeah, definitely make sure you peel back all those details on your insurance. I'm a huge believer in it. And what Pam has said, go in there, get in the details, dive into it. It is boring. Do it every year. I literally yesterday or a couple of days ago, I got my annual umbrella policy coverage, and I sat there and went through it again. I went through the names insured, got my list. I haven't done this yet. Got to pull out the exclusions. Hey, what's going on here? What's changed? I'm writing my check again. Big believer, but definitely getting the details on there and work with a great insurance agent. If you guys need one, we have some great ones we can refer out to you as well. So here's a question that you get a lot, Ben. And I know you know this answer, but what about for short-term rentals? Because we're living there, or maybe once we move out of there, how does that work with short-term rentals and insurance?
The biggest thing that I found how it excludes is the lease length term. So if you call your insurance, one thing to ask is how long is this person staying in your property? And it's typically the length of their stay. If it's below 30 days, then a lot of the times those your policy will not cover that. And so that's why it's very important to be clear on, hey, these people are staying here for that, whether it's your house hack and they're staying in a mother-in-law suite, or it's actual an investment short-term rental. Talk to your insurance provider and let them know of the actual lease length. And then, hey, am I covered if they do that? Like, and then ask your typical coverage questions.
You guys, anything to add on the short-term rental insurance aspect?
Yeah, I mean, I think you listed some common providers. I think there's this like misconception in the real estate investor world of like, hey, if I get good insurance, it makes me more of a target. Or like, if I ask my insurance professional this, it's going to make me more of a target. And it's actually the complete opposite. You want good coverage. It's going to cover like 99% of your issues. So yeah, there are a lot of different providers, like what Ben said, who will cover Airbnbs. They'll cover short-term rentals. And you want to make sure you have a provider that will cover what you need.
Yeah, and like double check it and be transparent with what you're doing on the property. Like you don't want to misrepresent or not tell, I'm not doing this, because they need to know to get you the right coverage.
Yes.
Insurance is definitely your friend.
And then one last thing is, you do not need those 3 insurance. You can call your local insurance provider and just ask for an additional endorsement or rider policy for mine.
Yeah. And I would just add that before you make a claim, also talk with your insurance provider, because sometimes it's kind of the analogy for your car. You know, you don't want to put yourself in the situation where you're making so many claims against your policies that you can't be insurable in the future. So a lot of stuff, if it's small damage or small things like that, you want to pay out of pocket, get it covered yourself so that you'll be insurable in the future for the big hits.
Yeah.
Yeah, but just from personal experience, we talk short-term rentals, you know, Airbnb and VRBO, they have an insurance option, but our experience, especially over the last year or so, has been they're very tenant friendly, right? So you may have a very valid claim where they did damage, the tenant did damage, and you present that to Airbnb or VRBO. I found they're very unsupportive.
Oh, that's interesting feedback.
Yeah. Oh yeah, 100%. Don't rely on another business to secure, rely on a business that's looking out for you, not for their own bottom line.
Yeah, same with property management companies. A lot of them in your contract have specific language that says that you're on the hook, even if it's their word that what they're doing. So it's if a fancy word called subrogation and indemnification. And so they'll have an indemnification clause that says you will indemnify them, meaning you'll be responsible even if it's something that they did wrong. So a lot of those contracts aren't in your favor.
I mean, in the chain, if one person gets sued, everyone gets sued. Like, that's the way it works. All right. So I know we got really, really good like overview there on, you know, some basics of asset protection. Hopefully you guys have some good ideas on that. Again, of course, make sure you reach out to a professional, do your own research, reach out to Byron, reach out to Pam, obviously, as well. We want to shift gears a little bit and talk about financing and some tax basics, because we all have to deal with this. And whether you're a sole proprietor or an LLC, there are some nuances on there. So, you know, a common question we get is, how do I manage my house hack finances? And going back to our original email here with our client, is that, hey, they start with like 1 property, get to 2, get to 3, get to 4, and you start really building your house hack stack. Now, I'm a really big believer in that, like, hey, when you kind of get your first property, second property, instill the good values there, instill the best habits, like instill the mindset, instill the best practices, because, you know, one of my early mentors told me, is like, hey, you don't become a millionaire and then get the mindset. You get the millionaire mindset, then you become a millionaire. So go ahead and start building up. Hey, I'm going to build a millionaire real estate portfolio. We'll start doing some basics out here. And a lot of this you can do for like practically free or for very inexpensive. So Ben, like, what do you do here?
Oh man. I want to, okay. I agree with you, but I'm a spreadsheets guy, and that's how I operate. And that's what I do efficiently. And that's how I do it. So I do
knock spreadsheets. I didn't say about,
well, you're saying like audit, like, okay, yeah, the Stessa, QuickBook, Mint, they're all great, but find something that works for you. What I do.
Oh no, tracking is what matters.
Yeah. What I do is I have a spreadsheet for each one of my properties. And even for a rental in Nebraska, I have that under property management. but I still put that into a spreadsheet because I want to know my bottom line every month at the end of the year, because I like knowing where my money's at. So I have a spreadsheet and I track it. I do it at the end of the month. Doesn't take much time. I put it in the spreadsheet. That's my answer.
And a lot of times, like there's no right or wrong. And I'm glad you said that, because the emphasis is track on there, like having capital letters is like, there's no right or wrong, but just please track it. I'm a big fan of like, hey, for every property you have, go set up a checking account. There's a ton of free checking accounts online or your local bank, and hey, put $50 in there. That's the minimum. Go create a checking account for every single property. Like I still do that. I have a ton of checking accounts, and that's how I do a lot of my tracking. I used to use spreadsheets, and they upgraded to like, and it used, the predecessor of QuickBooks used to be like some other program like QuickBooks.
Yep.
Then got to that. I was like, you know what? I'm tired of spreadsheets. I'm doing this. I hired a bookkeeper. And so a lot of times you go through iterations on there, but you get your stuff organized from the get-go. So I'm a big fan of, hey, track it, whatever way you want to, and have separate checking accounts. From your guys' perspective, what are the recommendations have, again, like what to do now, and thinking with like scale and growth in mind, going from, hey, I've got $70,000 equity, and one day I'll have $7 million in equity.
I mean, I'll just throw out from the not commingling that we talked about before. The biggest mistakes is I see people setting up these separate LLCs, and then they're putting everything in one bank account. And that kind of really gets rid of the whole purpose of having the separation of entities and the separation from your personal. So you've just eviscerated the whole protection that you got from the LLCs. So you really need to have the separate accounts, and you need to keep them separate from your personal.
Yeah, I'm a huge fan of actually talking to your CPA and seeing how the information needs to be organized so that the CPA can not only prepare your tax return, but can help you make an informed decision, right? So there's managerial accounting. So you take a look at the numbers and you somehow have to divine, okay, what do these numbers mean? And then from an accountant perspective or an advisor perspective, how are these expenses categorized? Because that can mean a whole lot of difference in terms of how you're taxed, right? So for example, we use QuickBooks. We spent last year, the entire year, my wife, she's an angel, spent the last year converting 17 LLC sets of books into QuickBooks, which was painstaking.
Holy moly.
That was brutal. And we had a bookkeeper help us. But what we're able to do now is we can scale and grow. So her time, yes, upfront, a lot of time spent, but now she can sit back and categorize expenses. And it's important to be able to categorize between just a typical expense and a capital expenditure or a capital improvement. So when you start to grow and get into bigger projects, like, just making sure that expenditure is characterized the appropriate way can mean a whole lot in terms of your tax return. But then backwards plan from what your CPA needs to help you make an informed decision and just set your business up that way. Again, whether you use QuickBooks or Stessa or a spreadsheet, ideally, whatever you're tracking is easily converted, or you can just provide that to your CPA, and it makes tax preparation super, super easy.
Yep. That's such a great point.
Yeah. And one very important thing that you mentioned, a separate checking account for any new house hacker listening that wants to do it by the books, is if you get a brand new house hack, put that house hack start a new checking account while you're living there, then put that mortgage into that checking account so it comes out of it. So then all your rents are going into that checking account. So then in order for you to pay your mortgage, you're actually paying out of your personal pocket into that spreadsheet to operate it as its own actual business.
Well said. All right. So again, 2 key points on here is start thinking like a millionaire. So separate accounts and track at the minimum is the starting point for every investor and house hacker. All right. Should I continue filing through TurboTax? Well, we know the first answer to this is, well, it depends. Who wants to take this one? TurboTax. Should I file through TurboTax, Byron? I saw Pam point to you, so you're taking this one. Thank you, Pam.
So it's going back to your millionaire mindset, right? The fees that you pay to a professional, whether it's a CPA, a financial advisor, an attorney, whatever it may be, it's not for a document that's produced. It's for the time spent utilizing that person's expertise to save you money, right? We're going to learn a whole lot about that here on the estate planning side of the house, but from tax and accounting side of the house, if you're reliant on what TurboTax allows you to do without having some professional real estate tax advice, I guarantee you're leaving way more money on the table than it would cost to go talk to a CPA. So I'll give you an example, right? Most people either are or eventually may have enough in their portfolio to qualify as a real estate professional. If you don't understand what that means and how to account for that and how to incorporate that in your tax return and to take advantage of some of these beautiful little opportunities the IRS provides, you're leaving a whole lot of money on the table. I would just tell you, as soon as I realized that I could qualify for the real estate professional, and I worked with my CPA to make sure that we structured my tax return in that way, literally saved, I think it's $40,000 to $50,000 a year the last 4 years, right? And my bill was about $2,500 to spend that time with my CPA. So you're almost negligent if you don't, in my opinion, especially in real estate, because there are so many tax benefits. Another example is,
I totally agree. And that's where like people, what's the saying? They trip over a dollar worrying about a dime.
Yep.
Like case in point there.
Yep.
$2,500, saving you $50,000 a year.
Yep.
Absurd. And that's how like hear all these headlines about billionaire real estate person this pays zero in taxes. Like it's the same the tax rules on there. It's learning the game.
Yep. And you learn the playbook, right? And so another example is, I know we're talking house hacks here, but to some degree you're actively managing this, right? That's an active activity. So the IRS allows for it at some point. Again, it's fact dependent, but potentially you can take some of the expenses that you incur while managing a house hack and certainly a short-term rental and use that to offset your ordinary income otherwise. So that's one thing on a short-term rental side of the house. That's a beautiful thing, is a presumption typically in real estate investment activities is that you're passive in nature. So then you have to show that I'm not passive in nature. But on the short-term rental side of the house, they've allowed for you to take those expenses that you incur and those losses, those real estate losses, and offset your ordinary income otherwise. So those are the kind of things, those are like, thousands, tens of thousands of dollars saved by simply talking to a professional.
I totally agree. Like that's where like, there's two things like, or I goes back to like, that book I read last year by Dan Sullivan, Who Not How. Yep. Like trying to go out there and spend time on, on Google and reading the IRS website to figure out this stuff. It is a nightmare and very hard to do. So I'm trying to figure out how to do it. You go get the right who, a CPA, real estate focused CPA, and let him or her help you go out there, navigate, and win the game. What about all those receipts? So we buy stuff, we have stuff, we get stuff, and there's receipts. And I'm like the classic example. I get receipts and I have a giant Ziploc bag of them at the end of the year, which I know everyone loves, but that's why I hire people. So what do you do with receipts, guys? That's what I do.
My quick answer is that's what I still do, but I keep it simple. And I will just take a picture of it using our smartphone technology that everyone can download these free apps. Take a picture, scan it straight to my computer, put it into a file. I have it. Then I file it on my spreadsheet and make a little note what it was about.
Wow. Can you do that for me?
No. Well, yeah, no, I should never say no. How much are you willing to pay?
Yeah, exactly. Right answer. So, I mean, obviously, you got to figure out a system. Mine is I capture everything and I keep it, but I'm not nearly as organized. And so, there's different systems. Man, keep receipts, and you should do what Ben does. Stay organized, track it. But it is very important to keep those receipts for documenting purposes, or if you ever get audited, like you want receipts.
Yeah, I'm a big fan of QuickBooks in that sense, because the same thing you just described. Scan a picture and you can immediately upload it and associate it with an expense. So it's slick, but you do pay for the service.
Yeah. Is that an additional fee on QuickBooks?
I don't know that it is, but
okay.
The one challenge is you do pay by business entity.
Oh, I'm familiar with that.
Right. So you are going to pay a little bit more money for that service, but again, it's less time managing that, more time finding new deals, right? Or strategic relationships or whatever your superpower is.
I was audited for 2017 and 2018. So I did do the painful thing of going back and finding everything. So now I'm pretty similar to Ben. I keep copies of receipts, or I have someone on my team who uploads it if I don't upload it.
All right. Yeah, so you gotta keep receipts and ideally stay organized, right? So what was the saying? Do as I say, not as I do.
Yeah.
So do as they say.
Or just get audited, and then that will really teach you a lesson.
I think that would be my path one day.
The Mike
Oh.
Tyson quote.
All right, taxes. So I mean, we could spend 2 hours on like taxes and LLCs and all this, but like basic stuff for like taxes. How different are they in an LLC versus being a sole proprietor?
Yeah, so I think it's just important to understand the IRS doesn't have an LLC classification. So when you form the entity, if you're a single member LLC, the default is a disregarded entity, right? So it just flows to your personal tax return. If it's a multi-member, it's taxed as a partnership. If you have an operating business that's going to earn fees or earn ordinary income otherwise, you can do what's called a check the box election. I think it's a 8823 is the form you file. And basically, you're asking the IRS if you can be taxed as an S corp or a C corp or whatever it may be. So that's a two-part process when you're setting the LLC up. Is where are you going to file it, and then how are you going to be taxed? Yeah.
And so we won't go into more details on here. We've got those other podcasts we've done with a lot more details about some tax advantages. But understand, like it's a different game to play. And also, when you do start an LLC, that's a new tax return they have to file every year and pay your CPA to do every year. A few $100 to $1,000 is kind of what I pay for my LLCs. So really good to know. But again, it just gets into this big nuance of paying a lot, like your personal tax situation, how the property is using, how it flows through to you or your spouse. So again, learn the game and get with the right professionals that know the game. All right, so I'm gonna give a big shout out here. We put up your slide here, Byron, for your practice, 3 Pillars Law. You can contact Byron, go to 3pillarslaw.com, reach out to his team. They do a lot of LLC formation, legal stuff. I've worked a lot with Byron's team on some capital raising side. Love working with them. Sent a bunch of clients to Byron, and I get thumbs up and lots of smiles. So if you need help, I definitely recommend Byron and his team.
Thank you for that.
All right, so let's talk about some estate planning, because this is, I'd say probably the end of where people think about for a variety of reasons, Pam. It's not fun, but it always comes into play. First off, what's an estate plan? And as a house hacker, do I need one?
Yeah, so an estate plan is a plan for what happens to your assets when you die or become incapacitated. And you do need one. I would say if you're a house hacker that's single, a lot of times my single house hacking clients come to me because maybe they have a significant other that if something were to happen to them, they want their assets to go to. And the default really wouldn't be, if they're not married, for that to happen, or they have a sister they want to take care of or something like that. And then, for my married house hackers or my house hackers with children, they really want to protect their spouse or their kids. So estate planning really is about, saving the time, the money, keeping everything private, putting together plans to protect if you become incapacitated, minimize taxes, and then preserve wealth. And it's really those two questions. What happens when I die or become incapacitated if I put nothing in place? And if you put nothing in place, really, it's not going to go how you like. It's going to end up in the government's hands. It's going to cost a lot of money, and it might not go where you want it to go.
Yeah, and unfortunately, this is always a when, not if scenario. So plan for the estate plan. I got mine set up a couple years with you, Pam. I think Ben did yours last year. So never too early, and definitely learn about it. And Pam is a great resource here. So bringing us to this is something that I was under the wrong perception of until we met a couple of years ago. So I don't have enough assets. I'm not old enough. I don't have enough going on yet to make it make sense for an estate plan. I was wrong. But I mean, give us some general rules of thumb for when it makes sense for someone to consider an estate plan.
Yeah, so it's not so much about how much money you have. It's about how much control you want, and if you want to give that control up to the government. But as a general rule of thumb, you're spending all this time and money getting these real estate assets that you want to be in your life and your family's life and whomever you want. So I would say anyone who owns real estate should consider an estate plan. Definitely when you have children. If your assets are over $75,000, I've had clients that have assets less than that. who, because of family members that have addiction issues or other things, they really want to protect it. But I would say general rule of thumb, if your assets are over 75,000, including your real estate assets, it's a good time to think about it. When you own a business, and just, really considering those same two questions. When I die and when I become incapacitated, what do I want to have happen?
So great stuff to do, and definitely do it sooner rather than later. One thing, actually, kind of a random question here because we were talking about, hey, do I put my house hack in an LLC? So as I said earlier, I'm house hacking, not your traditional house hack where I buy a place, live there for a year or two, then move out. I have a gigantic house in the suburbs, and my wife's mother lives with us. We built out the basement to mother-in-law suite. Amazing setup. We get like 5 home-cooked meals a day. She helps with the kids. It's a really, really good setup here. But we put my house in our living trust based on the estate plan. So as house hackers get their estate plan set up and they're building their house hack stack, does it make sense as they're buying a property, living there for a year or two, then moving out, makes sense to put in the living trust while they're there?
Yeah, so that's actually a good alternative, because putting things in a revocable living trust, revocable meaning you can change it, living you're setting up in life, but putting it in a revocable living trust doesn't trigger the due on sale clause for mortgages. And when you pass away or become incapacitated, it protects the people you care about. So you can put your house hack in a revocable living trust. You can put your primary residence in a revocable living trust. And then anything that's in an LLC, we usually do an assignment on death to your trust to have it avoid probate.
So is your house hack been in the living trust?
Mm-hmm.
All right.
Yep,
so not an LLC, not your name, but living trust, right?
Yep, that's
all
still
right.
active.
Yep, there we go. So how do I keep track of everything now? Ah, man, loaded question here. You got the solution for us, right, Ben?
I have the solution for me. It can, so like the slide said, it can be a lot. You're changing a lot of assets. You're like we mentioned, whether you're living there or not living there, setting up different bank accounts, and then you're setting up LLCs. And then if you choose to do an estate plan, there's a lot of transfer, so it can be a lot. But the biggest thing is having documentation of that transfer. And what I did is, I think my wife and I planned out a whole weekend where we did it all. Then we printed everything out, have it in a file with our trust as well, so it's in there in a fire safe. And then we also have it saved on our computer as well, so it's all there, because we did this 2 years ago. If you ask me every single step of it, I don't remember it, but I know where to go and where to find all that information. So do whatever you need to do to make it easy on yourself, even if that takes blocking out a weekend.
I agree. And to me, there's a couple layers where, you have your systems and software and websites and stuff you use for real estate and banks and, 401ks and all that stuff. But then I found very helpful, which was some silver lining in the estate planning, was like going through like your documents there, Pam, and like where it forces you to kind of organize every single asset. And like, that's the only document I've had where I've had to put everything together into one form and actually be held accountable by someone to actually go through it. And so I've liked that a lot. And then not quite up there in every single, yearly planning review, but I know you've got your like, hey, let's sit down to your review of your living trust. I actually think that living trust review in that form is a great like umbrella catch-all for all the assets that get scattered across real estate, bank accounts, your 401k, your self-directed IRA, this LLC, this or whatever. Like, I actually love that a lot. And that's been very helpful for me. Like, oh, wow, this is kind of like my backstop to help kind of like catching any loose ends. So
yeah, absolutely. Like our intake processes, we have you kind of fill out and give us information about what you have and where it is. But I always tell people kind of the easiest way to get started with this type of planning is to just grab a file folder, put the first page of everything you own in it, and then tell someone where it is. So if something were to happen, people can find it.
Yep. And I got your documents. I got a new fireproof safe at home. Here's a promise: set the fireproof safe. You have to put your documents in there. So get it all organized and then put in the fireproof safe, right?
Or bag.
Or fireproof bag. All right. So I want to give a big shout out here to Law Mother, which is your practice, Pam. I said I've used them. Ben's used them. A whole bunch of our clients have used them. All I've heard is amazing feedback. So if you guys want more details on estate planning, we will link it to a webinar Pam has done, which has a bunch of details on there. I think some coupon codes in there as well. And also you're great about giving some like complimentary calls, help people kind of like, hey, let's figure things out. But what's the ideal process that you want people to follow so they can learn and be prepared for this call?
Yeah, I would just schedule a complimentary 15-minute call with that QR code, and you'll talk to someone on my team, and they'll go through and ask you some background questions and then make sure it's a good fit for both of us.
Great. All right. So if you guys need help in general for like putting together your house hack plan for, hey, what do I do with this house hack? Should I keep it, sell it, buy a next one? Or just kind of like, hey, I got a lot of stuff going on. What do I do? We would love to sit down with you. I say we as the Envision Advisors. Now, we're real estate brokers. We help people go out there, buy, sell house hacks and investment properties. But often, you know, we're playing kind of the quarterback position for everything overall. Now, while we're experts in strategy and buying and selling real estate, we're not experts in law, legal, finance, but we know the experts that do. So we can share a lot of stuff that we've done ourselves as investors, you know, Ben and I, our team, what we've seen hundreds of clients go out there and do. Again, a lot of good stuff. All like, oh, well, we learned that lesson. Let's not do that. Do this instead. So very, very happy to help review your portfolio, review your goals, get them aligned from like a financial freedom aspect, like how do you get there, but also get you connected with the right team of professionals to make sure that you're protected, you're planned that well, you're taking care of tax advantages, all that stuff you need to go out there to just win at the game. Any questions, come out and reach out to us for a business plan. So with that, I mean, that wraps up the webinar, guys. So big thank you to Byron and Pam for helping to prep here. I know you guys are incredibly busy as well. So I appreciate you guys coming to the studio. So thank you, thank you, thank you. Any closing thoughts, tidbits, or things we want to clarify before we wrap up here? I'm going to start looking at a couple of questions from the chat as well.
I just want to say thanks for the opportunity to get on with you again. It's always a lot of fun, especially when Pam's here as well. And it's great to interact with Ben a little bit. So thanks again for the opportunity.
Absolutely. All right. So a question here is, do you have any recommendations for CPAs? Yes, we do. Email us and we'll send you one. I see some bookkeepers as well. Same thing. We got some recommendations on there. And I'll just a side note, I found CPAs and bookkeepers really hard to find a real estate focused one. So reach out to us. And sometimes we have a great one that knows real estate, taking on clients. And a lot of times they get booked out. So I would say start planning sooner rather than later for finding like a real estate focused CPA and or bookkeeper. Someone says here, do you have any good lenders here that can do house hacks and LLCs? Not really for that, like we talked about earlier, but reach out to us. We'll give you some really good lender programs here for what you can do with house hacks. All right, guys. Well, that's everything.
Mm-hmm.
Ben, thank you. Pam, thank you. Byron, thank you. People out there viewing and listening to us, thank you out as well. Any questions you have on this topic or things that spur off, reach out to us. We love to be like your resource, your guide, help you kind of figure out what moves to make. And we'll either tell you what to do if we can, or we'll tell you the right who to go out there and find. All right. Thanks, everyone.